welcome to another video. I'd like to first thank God for this opportunity. In the last video we did Monday, we went into super detail, dropping down to the 1 minute, but that video was too long. I cherish your time. In the future, I will be going over detailed videos like that. So for Tuesday, Wednesday, Thursday, and Friday, we're going to just stay on the 5 minute because it is possible to get good entries on the 5 minute and the 15 with the same techniques. And we're just gonna go through them a little more quicker than we did Monday. If you guys want super in detail price action, join the Discord. Link will be in the description. At my 20th subscriber. Alright, so Tuesday. So when we look at the new day, we always want to look at the previous day high, previous day low. Those are very important areas that price may want to go to. So we have the previous day low, previous day high. As you can see, eventually throughout the day, we don't know this is going to happen, but we do know that potentially price will want to come back and get these relative equal lows here and these relative equal lows there. So we'll delete that. I'm going to keep that in mind. Right off the bat, you always want to also look at the most recent leg from the end in New York and just see what order flow are we in. So we got that market structure shift and breaker structure, true day open, breaker structure. So you see that, and as we enter into the beginning of the day, it is pretty choppy. Come down, give us a breaker structure. When we get a breaker structure, we always, as market structure goes, when we get a breaker structure, we expect a pullback. Then we expect another breaker structure, then a pullback. In this case, we did have low liquidity, low resistance liquidity here. I believe that's what it's called. And price decided to manipulate up, activate all the buy stops above this area here, and take out all the stop losses from sellers that were shorting these price legs. Manipulated up, came down, and gave us another market structure shift in alignment with the higher time frame order flow, which is bearish. So this market structure shift, you wouldn't instantly want to go long because we've been bearish for a good couple of hours. So if you decided to want to go long here, you would have to definitely wait for another breaker structure to the upside. And then to confirm that this is now a whole bullish move, you don't want to just jump into a buy because you see the first market structure shift. That's how you get trapped. Then you would be going long here, stops below here, and then realize that price just shot back down straight to your stop loss. And then you guys wonder why as soon as you enter your trade, it runs straight to your stop loss. And this is the reason why. It's just a little bit of patience. So you have that here. After you realize that, okay, this was a potential liquidity grab, we wait for price to realign, so we wouldn't be taking any trades in this consolidation here. We wait for another market structure shift, potential entry would have been here in the 5 minute. After that market structure shift, it never closed above. But then this is where you drop down to your lower time frame, and then you could have shorted, targeting this liquidity here, and potentially an imbalance here. You could have had many reasons to target areas here, or you could have just done 1-to-1 risk to reward ratio. That happened between this entry, this setup was between 4 a.m. and it left at around 4 or 5, so that was the trading window. And for the rest of Asia, they sold off. Then we enter into the morning, early morning, between 6 and 7. We do get that market structure shift to the upside. And now we get the confirmation from a market structure shift, and we're not going to just take the trade straight off of that. We're going to actually wait for the breaker structure. And if you do wait for the breaker structure, you realize that if you didn't wait for an actual entry, fair value gap entry there, that you would have then stopped out again. So as we enter, we didn't close above that fair value gap there. I don't really extend my fair value gaps like this. If you're using a M5 as a POI and you're using the 1 minute, you could potentially have found an entry in here on 1 minute 30-second market structure shift fair value gap entry. So right at 8:30, we got the first impulsive move, and it looked like we were going to take this sell side liquidity in order to fuel the move at New York Open, and then that's when we get our moves up. In the lower time frame, like I said, we are definitely going to be getting into the lower time frame like we did in the last video. As soon as if you join the Discord and or if we get a lot more requests for lower time frame analysis. So we get that move up. For sure there is an entry in here. Price goes up, giving us a market structure shift. There is a fair value gap price in there that you could have potentially jumped in to go long. And all you're really doing is looking for that market structure shift. So we're bullish from this market structure shift. And then we just follow order flow, pull back. It looks like this is the back, this is the arm, and this is the forearm doing the uppercut. That's just what I call it personally. I'm sure, many people before me called it something else. I don't know. They call it, it's a pattern, some type of pattern or whatever. I don't trade patterns, so I wouldn't subscribe to that. But it's just basic market structure, pull back and extension to the upside. So this entry here, I believe this was going into lunch after the AM session. So this was your AM session move. We had our fair value gap entry there. As you can see, there was an entry that was activated by Wish Me Well from Blessed Indicator. And you could have went long to target that previous day high liquidity there. And that was the day. That was Tuesday. Thank you guys so much. Thank God for this opportunity again. And like, subscribe, turn that notification bell. Discord coming soon. Will be dropped on my 20th subscriber. And see you guys in the next one.